All right, guys. Let's see if we can get a little following here going. Um, haven't done one of these restreams in a bit, uh, but I think this one's going to be interesting. Let's see if this is working. Test. Okay. All right, guys. So when is alt season? Hey, guys. I want to talk a little bit about. I had this idea. There we have Ben Sigmund behind me. Say hi.
Hey, everybody.
All right, guys. I want to just do a little quick video on Bitcoin yield and why finite money can still produce yield. So I saw some posts today about Bitcoin yield from Munib at Stacks and others talking about Solana yield. And I want to talk a little bit about Bitcoin yield because I think this is something that is not very well understood. And I posted today how I think it could really change the future of banking and what does banking look like in a completely finite world, finite money, hard money world. So I'm going to kind of read through this, and I may stop and kind of add some thoughts in it, but here it is. So the title is From Gold Florins to Bitcoin, Why Finite Money Can Still Produce Yield. So in the early Renaissance, Cosimo de' Medici transformed Florence into the financial capital of Europe. His family's bank, which was founded by his father in 1397, his father, by the way, was named Giovanni, and it took in deposits of gold florins, right, for safekeeping. And these coins were pure gold, 100% gold at a fixed weight, and I think about 20 grams. And they were trusted universally across Europe. They were the gold, literally the gold standard. Now, he took in money, and depositors earned a yield on their gold. So even though the supply of florins was more or less finite, yes, there was a little bit of mining happening at the time, but actually nowhere near kind of the large scale mining that we have today. So mining was much more limited in the era of Cosimo, and Cosimo structured the loan so his clients received between 5 and 10%, depending on the lockup periods and the terms, and who the client was. And so they got gold returns on their gold. So how did that work? Well, again, depositors gave the florins to the Medici Bank. The bank lent out those florins to the Pope, also to kings, including, there was a bunch of these city states at that time. And so lent it out to the Doge of Venice, all these people, all these city states. And they lent it out mainly for to do trade routes. So people like Marco Polo, you remember him, but also wars. So basically, there was sort of an entrepreneurial activity at the time, which was invade. That was the entrepreneurial activity. So Cosimo said, "Great, you want to do a war? We'll finance the war, and we want, we're going to probably need 15%." Because it's kind of a high risk endeavor. But when you win the war, we want to get some of the spoils of the war, the proceeds. So this is not printing money in the sense of modern banking. It's very different, right? This is the sense of kind of what they called merchant banking at the time, and
merchants of war.
The merchants of war, right? So also people saying that Bitcoin, this is interesting because a lot of people are saying Bitcoin can't, is incompatible with modern warfare. And it actually may be compatible, and actually maybe Michael Saylor is going to become the merchant of war, right, in the future, or maybe his children or descendants will become the new merchants of war. Anyways, fast forward 600 years, I think we're going to a Bitcoin standard, and I think Bitcoin, like the florin, is going to be the new hard money. From the 1400s to the 20, the late 2000s, we're now going to be into this hard money era. And so what are the interface? Well, they could be high, right? They could be very high for certain high-risk projects. And the new merchant banks, right? The new form of banking that is going to emerge once we get through to the other side, where Bitcoin is the main asset, is the main form of money, right? The new money will be lent, Bitcoin will be lent out as Bitcoin. It will get a yield in Bitcoin. And it's going to go into things such as quantum computing, artificial intelligence, nanotech, all kinds of other things that we can't even dream of. So are we going to still need loans? Yes, we are going to need loans. We're going to have capital projects that are going to need big loans. How are the loans going to be done? Well, we're going to have assets that are going to be pooled together. We're going to have people lend money to banks on a fixed term. Those banks are going to make loans just like the banks did in the early America, just like, in the 1870s, the Mellon Bank, for example, led to the building of Alcoa and Gulf Oil, right? And Andrew Mellon became chairman of the Treasury for a very long period of time, right through the 20s, the Roaring 20s. Andrew Mellon was the chairman of the Treasury. And so I see us going back to something very similar to that on a Bitcoin standard. So that's kind of my view. And so essentially what I'm trying to point out here is that hard money does not mean zero interest. And I know it hurts your brain to think through this stuff. It's sort of like a very hard chess problem. When you look at it, you're like, there can't be a solution. Well, there is a solution. And the solution is that you're going to lend money. And even though in the totality, there's still just 21 million coins, individual lenders can have thriving businesses because they choose to lend money to the right people who are going to be able to multiply that money in Bitcoin terms efficiently, right? And so I do think that lending is going to play a very key role in all of this. So that's my little video for today. Hope you guys enjoyed it. I'm going to be, Ben and I are writing this book on Bitcoin with 21 chapters on the future of Bitcoin. Why don't you say a little bit about it?
We're going to get our author's copies today, actually, to go through it. We've been reading and rereading it and rewriting and rewriting.
Yeah.
So we're kind of in the last phases of rewriting now. And we're very excited about it, honestly, because we think we're telling a story, not just through numbers, but through philosophy and through sociology and through economics about the future of Bitcoin and where it's going to go and what the world looks like at 1 million and 10 million. That's kind of what gets us thinking about these things, because as we're having discussions, we'll get into sort of how the world works. Something that we've been wanting to write about for a while.
So our first book,
the first book is Big Bitcoin.
Here's our book. Here's our first book. The first book was the Big Bitcoin book. And the first book was really about the past, right? It was about, what were the ideas of Bitcoin? What were the mathematical ideas of Bitcoin? Voluntary transaction fees, the idea of proof of work, all these things. These are the past. Now we go into the future, and it is, where are we going with this Bitcoin? What does banking look like? Just kind of like I was talking about. What does inflation look like in a Bitcoin world? What, there's question after question after question. What about quantum computing? Hey, Jacob Price, how's it going? So there's a lot of questions here. And so we sort of framed this discussion in 21 chapters, right? So we have, this book is about really the next 20 years. And we sort of see Bitcoin hitting a $10 million price point in 20 years, roughly. And we wanted to go through each aspect of this journey. And so the way we broke it down is, and we have a whole little very, very complicated system here. As you can see, we have these little Post-it notes on this board. And these Post-it notes are all of our, how we kind of brainstorm through these 21 aspects of Bitcoin. And so we're kind of going through editing, re-editing, rewriting, etc. And basically the way we sort of see it is, first of all, the power law, which is sort of the statistical behavior of Bitcoin so far, just purely from a mathematical standpoint, and not just in terms of price, but also in terms of addresses, hash rate, a bunch of different aspects. The power law versus gold and other things. Power laws versus exponentials, volatility reduction, all these kind of somewhat complicated mathematical ideas, but we want to sort of really get to the essence of what the stats are telling us about Bitcoin. That's chapter 1. Then chapter 2 is about the money printer. I mean, how much is this money printer going? Where is it going? How is the US doing versus Europe versus Japan versus China? How is M3 versus M2 versus M1 versus M0 base money? How is Bitcoin relative to that? And how is this money expansion increasing over time? So we want to just kind of present all those facts in one place. And I'm pretty confident that we've got that now sort of distilled into one great chapter. Chapter 3 is all about inflation, right? So this is a really hard chapter to write because, there's a lot of debate around inflation. And, we're going to get into this in our video on this, but just say, half the people who follow me think we're going to go into hyperinflation and we're going to have, something like Weimar Germany. And, you're going to, if you don't have Bitcoin, you're going to be living under a bridge eating cat food. And the other half are more like Joe Carlasale, who think that inflation is kind of no big deal, and the Fed's going to get everything under control and everything. So we kind of want to figure out where we stand in that, how AI will play into this equation, how UBI will play into this equation. What is inflation really? What is it for different kind of constituents? How are people thinking about inflation, and how is that likely to change Bitcoin adoption? So that's a big chapter. Then we get into stocks, and we talk about, how do we really think about stock market returns of the S&P relative to the money printer, relative to the normal allocation, which is 60-40 stock. So most financial advisors are recommending that the majority of their advisees' money is put in the stock market, not in Bitcoin. So we're going to challenge that.
The S&P has won 0 of the past 10 years.
0. It's true. Bonds won 1 and gold won 1 of the last 10. And so, by the way, we have a companion app to this, which is the Bitcoin 1 million app. I think you just posted some new updates to it, Ben.
It's in review, but we have an Android version coming out, and you can look at the website, b1m.io, bitcoin1million.io.
B1M.
b1m.io is really good. That's kind of the companion to the book. But ultimately, this book, what Fred's saying is we're going through these chapters. We're in the chapters about the assets now.
I will say this book,
Gold,
I'm not
Bitcoin,
going to cut corners. I'm going to tell you, this book is going to be the most important book on Bitcoin ever produced. And we look at this as, up until now, this was the best there was in terms of ideas around Bitcoin, the Bitcoin standard. And I would say number 2 would be Lynn Alden's book, Hard Money, Broken Money. And the sort of number 3 would be probably Jeff Booth's The Price of Tomorrow. We think we have, neither of these books really paints a very clear picture of where we're going. Like, are we going to 1 million? How are we going to 10 million? How fast are we going? Why are we going? What are all the different parts? So we think our book is really forward looking, which is most important for investors in generally, right? Because we need to know, okay, what does this all mean for me? And so we're trying to combine everything, the entirety of the debate in one book. And in one
thing that happened is that when we wrote this book, we'd meet people, or we'd see people we hadn't seen in a while. We'd say like, hey, I wrote this book. And people say that's how I wrote the book. And there's one page in this book.
Yeah, one page.
That keeps coming up in our conversations because ultimately a lot of people don't get Bitcoin. And one way that we've been explaining Bitcoin to a lot of these people, a lot of them are very, very smart people who have real careers, who have money. And, but where do you put your money is the ultimate question really that's important for people to understand. We have one page in here in particular, I have to find it, that addresses this question of where do you put your money? Stocks, bonds, real estate, gold, or Bitcoin? And we sort of looked at a 15-year time frame. I don't know what page number it's on, honestly. But let's find it here in the index. We looked at a 15-year time frame of these assets. One thing we know is that assets typically beat inflation. Okay. So you don't want to keep your money in cash. That would be bad. But which assets you choose, each one has a relative gain in value compared to the others, and it's all measured in dollars. We could measure the gains in Bitcoin, but the system of measurement that we use today is dollars. Someone was asking on one of my threads today about like, why don't we measure in these assets if they continue to grow in value against the dollar? And I was like, well, we don't measure distance in houses.
No.
Right? We need a standard unit of measurement. That standard unit of measurement is the dollar right now. And so let's see, real estate. So anyways, so this one page is like a 15-year outlook of Bitcoin versus these other things. And so it depends sort of what the future looks like. We can look at the past and understand how these assets all performed against one another. And obviously Bitcoin has had the best, it has had 8 years that was better than everything else. Here's the page. It's got this picture of like some kind of grotto.
I think this is Monte Carlo.
It could be Monte Carlo. Yeah. So we have some kind of,
Yachts.
Picture luxury real estate, luxury yachts. Like this has been typically been a safe investment for the past, 50 years. But this page is really good. And this one page became an entire book now. This page says there's a 15-year horizon, Bonds, you could lose half your money. Stocks, you lose between 60% and 0% of your money. Real estate, to keep pace with inflation, maybe you're slightly better. Bitcoin, well, you can 10x your money. Now, that math of how that works out and how Bitcoin going 10x in the next 10 years works is what's become this entire new book called Bitcoin 1 Million. And it's but inspired by a book that came out in 1999 called Dow 36,000.
Yeah.
When the Dow was at $3,000, some crazy guys came up with this idea that it was going to 10x in 5 years. Those guys, they were wrong about the number of years. They were right about the direction. And it took 20 years for the Dow to 10x, but it did happen. And both of those guys are like pretty famous economists now that went on to serve 2 different presidential cabinets. And
one was named Kevin Hassett.
Yeah,
I think.
Yeah, exactly. One of them's serving right now, actually, in Trump's administration somewhere. So anyways, the point of this is that we've got a really compelling argument that looks at all the different aspects of how Bitcoin can reach 1 million and beyond. Using the power law, but also looking at things like the amount of money that's created in the world, how that money, even just 1% of it that's created over the next 10 years, can cause Bitcoin to go to 1 million, which is actually,
and a lot, part of this particular video was, inspired by Joe Burnett put out a post today about, what does the world look like at Bitcoin 10 million? And he's like, well, let's assume that no other assets go up in price. And I was like, well, okay, that's a terrible assumption. He's like, well, it'll probably look a lot like it will today. Well, we don't think so. We do definitely think that the world in 20 years is going to be very different from the world today. Very, very different. And, it is true that the amount of fiat out there is so large that Bitcoin will not be a majority of the assets of the world in 20 years. It will not.
It doesn't have to be.
It doesn't have to be.
It doesn't have to be. It actually doesn't require that much. But when we wrote this book, the Big Bitcoin book, we're really focused on the history. But we wrote this one page about the future here.
That was it.
And this page says, let me just read you this page, okay? So let's say you have $1 million to invest over the next 15 years. If you invest in bonds, let's say you earn 3% after taxes, leaving you with 1.5 million at the end of 15 years. Unfortunately, if inflation runs at 7%, your real purchasing power would be halved. Investing in stocks could follow two paths. Best case, you could replicate the last 15 years and quadruple your money. After taxes, that's 3x, which barely outpaces inflation. However, if the next 15 years mirror the period from 65 to 80, you might only see a 1.2x return. And then you have 40% in real terms of your nest egg. Real estate might fare slightly better. Historically, real estate tends to keep pace with inflation or do a little better. So in 15 years, you might see a 2 or 3x return, which after taxes and inflation could still protect your initial investment. On the other hand, if you invest in Bitcoin and its growth follows the power law, you could be looking at 50x return. Even after taxes, that's 40x. And after accounting for inflation, that's around 14x. So to be conservative, let's round that down to 10. This is not financial advice, your own research, but the numbers speak for themselves. Allocating 20% to Bitcoin can make a massive difference in your financial future. This was written a year ago. Now, in this past year, we've actually been doing a ton of research and also we're reading other people's research, like Matthew Mazinski's, about how much money gets created, how it gets created, what are the actual inflation numbers. The government reports one thing, but how can we measure inflation? We've come up with a lot of data. We've just got mountains of data. We sit here in this room every day just coming up with ways to measure these things and chart it out and compare them. And this is all going into the book. Some of this is in the B1M site, but the book's going to cover all these topics. And so when we wrote this book, we were writing about 7% inflation. Now we know that inflation's historically averaging out to 4.5%. And we found that out by taking the price of things in 1971 and comparing it to the price of things today. Right? So we're looking at things on a 50-year time frame or more. And so we're getting really interesting numbers, and we're using those numbers to illustrate and argue how Bitcoin 1 million is an inevitability.
And Bitcoin 10 million. They're both inevitable.
And Bitcoin 10 million.
They're both
beyond.
They're beyond. All these things are inevitable, but we want to be unlike the Bitcoin standard. By the way, I'm going to critique a little bit the Bitcoin standard. So in here, we have let's just go here, stock to flow. Okay. Let me just show you 199. Okay. This is an example of why you have to be very careful about how you go. Stock to flow. So the stock in this page, page 199 of this book, Saifedean, who is not a mathematician, right, is very sloppy when it comes to using stock to flow. Very sloppy. I mean, I would say it almost discredits the entire book, to be honest. Okay. Now, the mathematical community on Bitcoin, myself, Giovanni, Stephen Perrinode, Plan C, Cena in particular, we've picked up on this. Okay, we know that the stock to flow model is mathematically invalid. It's just completely invalid. And so we don't think Safdien understands that. He is not quantitative enough to understand that. And he just kind of parroted it. And, to be honest, his book was written before the power law really kind of achieved prominence. So he doesn't quite understand that the power law is not a theory of Bitcoin. It's just the statistical measure of Bitcoin. The model fits. The stock to flow model is not a valid model. It's just it's an invalid model. It's been discredited. You should not use the stock to flow model. And it never made sense. It never worked. Okay?
Well, that's not true. I mean, when we first looked at stock to flow, really, in 2020.
Yeah.
I remember we were sitting there looking at stock to flow and we were going, "This chart is amazing."
It was too good to be true.
We were looking at this chart. We're like, "Oh my God, this is amazing. This is a thing of beauty."
Yeah.
Look at how well the price matches this chart. It's just unbelievable, and you just love the colors of that thing. It's hypnotic. You just see these rainbows. The rainbows of the stock to flow. It's like, oh, it's in the red now. It's going to the green. Now it's in the red again. Wow, it's amazing.
Yeah.
And I think that some of these models have, basically one way to understand these models is that there's a correlation that can be calculated of how accurate the model is at any point in time. And at that point in time, it had a very high accuracy. But from 2020 till today, the accuracy of that chart has gone down massively. And the accuracy of the power law has gone up massively. Yeah. And so the power law is currently the most accurate way that we have of measuring and predicting Bitcoin's price movements. So it's not that a model exists or does not exist. All models exist. But just how well the data fits the model, how well it correlates to the model trend line. And so,
talk a little bit about the. Yeah, go ahead.
So basically, it's one of the things. I showed my dad chapter 1 of the book a few weeks ago, and he's a big stock guy, of course. And so he's like, "What about PGE? What about Citigroup? What about the S&P? Don't those follow power laws too? Like, what's so special about this power law?" And I was like, "Well, they don't." And the truth is, I had to go test it out, so I went and downloaded the monthly data to the S&P the other day. And the S&P began in March of 1957. So in March, I think it was March 4th, 1957, the S&P began. So if we want to calculate the power law data if we want to calculate a power law model trend line for the S&P, you can calculate it, right? And I did. I took all this data, the monthly data. I could share it with you guys too if you want to see. It's on my power law spreadsheet. It's one of the other tabs on there. It's kind of useless data, but I'll explain why a little bit. Okay. You take all the price data every day, the daily close price is what I chose, but I just closing price every day from 1957 till today. Then we take the amount of time that's passed from the origination to each price point. Then we take the log of that. Then we take the log of the price.
Yeah.
That's it. Now we have a log of the price, a log of the time since the S&P was created. And what you find is that because the S&P did not start off with massively explosive growth, it's not a power law, because a power law is when something has a massive starting growth that tapers over time. And that's why time is a really big part of the function.
Yeah, in fact.
The correlation of this power law trend line that you get when you map out this data, because you can apply the power law model to the data from the S&P, but the fit you get is 3%. Yeah. 3% fit.
Yeah, it's a terrible fit.
Which is basically zero.
Yeah.
It doesn't fit at all because there's no correlation between S&P and power law. Now, Bitcoin fits at like a 96, 97%.
But there is an amazing fit between the S&P and an exponential function, right? So if you look at the exponential model, it fits the S&P very well. It fits gold pretty well, not great, much worse. The fit's much worse, right? Because gold right now has been trending, but there was a enormous period of time where gold was trending down, right? So, the idea that gold is trending at a constant rate is just not statistically valid, right?
On a really long scale, if you smooth it out, it is.
But it's not. The R square is still very low. So the R squared of gold to the R squared of the S&P over the last 15 years has been exceptionally good. Okay, it's 97% on an exponential.
On exponential.
Yeah. And also money supply is very good. So money supply itself, okay, is a very high correlation to just a pure exponential. That's
money
it.
supply is exponential. SPX is exponential.
And real estate prices are
Real estate is
exponential.
exponential.
And gold. So most things are exponential. They're growing at sort of like somewhere in the 7 to 10% range per year. If you looked, where do you expect gold to be growing at 10 years from now? 7 to 10%. Where do you expect real estate to be growing from 10 years from now? 7 to 10%. Maybe a little less, maybe it's 7, maybe it's 6, but it's somewhere in those areas. Where do we think Bitcoin is? No. Bitcoin, you got to look at a power law chart. So this is where I think, I'm going to diverge with a lot of people like Tom Young who say, well, the power law is just, the past and we're going to break it. No, we're not going to break it. It seems very unlikely that we break it. It's going to take a lot to break it to the upside.
It would take a long time to know if it's broken too. We were talking about this morning, but let's say Bitcoin shot up to $1 million tomorrow. Okay, or in the next few months, let's be realistic. In the next few months, let's say Bitcoin shot to $1 million. Now, is the power law broken? Well, kind of, but if the price comes crashing back down, then the average over time can still favor the power law.
Right.
So you got to think about this trend line that we have for the power law, which you can see at b1m.io. Why don't we show it?
Yeah.
Show the screen. Can you?
Yeah, I can just show it. Let's just go into.
We have the mobile app too.
Yeah, of course. But let me just go to.
But it's better for you guys to see it, not.
Okay. Yeah. Let me share b1m.io here.
B1M, yeah. I'm thinking about making the curve the homepage. Honestly, I think people.
You think so?
Yeah.
I disagree with that idea.
People really like seeing this curve.
Okay, let me just change that to that.
So
how do I change this to? There we go. Okay, so or even that, the better probably. Okay.
Yeah, good.
Okay, so this is the b1m.io, and so
why don't we go through this a little bit? Let's
go through this a little bit.
Can you clear your cache?
Where?
Reset cache there at the bottom. Yeah.
Clear cache?
Yeah. There you go.
Ooh, beautiful.
That's the new.
Okay, so let's go over this app. We're very proud of this app.
Yeah, this is looking good. Let's make it a little bit bigger here.
Perfect.
That's 100%.
Beautiful. Beautiful. Okay, so here's this app. Let's just go through the dashboard. This dashboard, by the way, was inspired by strategy.com. So, strategy.com gives you sort of all the metrics for MicroStrategy. And we thought, how about giving those metrics for Bitcoin? So first thing you look at, these are the most important numbers. What's the price of Bitcoin? 115,858. This is from CoinGecko, pretty much real time.
Pretty accurate.
Yeah.
Yeah. Not all the prices are 100% real time accurate. But that one is.
This model price.
So that model price is the trend line price that you can calculate based on the slope here. So this slope is giving you this model.
By the
price.
way, I want to check this number to make sure it's updating every single day. I'm not 100% sure it is.
No, it is.
Yeah. Is it?
Yeah.
Because I've seen it like a couple of days ago. It was 375 too.
Oh, we can go and look at it on the chart maybe.
Yeah.
So if you click power law, that takes you to this page.
Okay, let's go here. Yeah. Oh, I didn't know you could get there this way.
Yeah, it's kind of. I wish there was like a date picker actually.
We need a date picker.
Probably is good to have a date picker. But
yeah,
what you can see here is that this is a really good power law chart. Although I kind of like looking at it in log because it's the straight line. But
yeah,
every date.
So where are we today?
We're up here, kind of in this range.
So 9.
This is 925. So it'll be 925. It'll be 104,620. So here's the upper. So let's talk about these lines for a minute. Just right now, the power law is about somewhere in there
about
between those two.
103.
So you can see here is that
By
in
the
next,
end, by the end of the month,
by the month it's going to be 104.
104 and change.
Now, it doesn't mean the Bitcoin price is going to be 104,
Right.
right? The Bitcoin price is between the green and red line, which is actually quite a big range, but it's one standard deviation above.
Down. It's two.
One
above.
down or two above. Yeah, one down or two above. So you take the number of the power law price today and divide it by half. That gives you lower. And the upper is twice that. So the Bitcoin price can be somewhere between 2 times the power law trend and 50%. Now, these are not numbers we made up. These are based on historical movements. And actually, it makes sense if you think about it. If the Bitcoin price were double what it is, there's more pressure for people to sell because they're
triple.
unrealized gains.
Triple because it's
right, triple. Yeah, triple.
triple.
Yeah, triple. Really, it's triple.
3x.
It's really a 3x line. Right?
So it's either
it's
you
3x.
either go.
I forgot we did 3x on this one.
Yeah, it's 3x because
that's kind of bubble territory.
It's bubble territory, and most
it can go higher than 3x. It has,
but these numbers are coming down, right?
Right. So
the
we
3x
want to
is kind of. It really is kind of.
You actually want to imagine these bands getting tighter.
Yeah.
As it goes on, so it's like, yeah, it's kind of interesting way to think about it.
Yeah. We even have models saying it should go down to 2x. 20 years from now. Right now it's 3x. Before it was 4x.
And part of that's because the more valuable it becomes, the more buying and selling you need to do to move the price at all.
I think the other thing is there's sort of a reflexivity. I think people, even if they don't understand the power law, they're understanding that there is a bubble, and they're coming back to this. And I think even our pushing the power law will actually impact the Bitcoin
Yeah,
price.
I think that's going to happen too. So the more people that kind of have access to this data and can review it, they're going to also show more people, and it becomes a self-fulfilling prophecy.
Let's go back to the dashboard.
Let's go back to the dash here. So that's the power law model price. The multiplier is sort of how far above the power law.
So this is just a ratio. This is just like
take the market divided
by the.
And that's explained here. You can click on these and you can see multiplier equals market divided by model.
Right. And by the way, how do we build this? We use AI to build this.
Yeah, pretty much.
It's we're doing a lot of AI experiments in this room.
Yeah, we are.
And this is
but we're the composer and the conductor.
We are.
You can't just tell.
We can't.
You could just tell AI go make a website about the power
book.
law, but it's not going to come up with this. Yeah. We told it all of the metrics to put on here,
and it's an iterative process as well. Okay.
So then we have the 24-hour change approximate.
Yeah.
From CoinGecko. Then we have the slope of the line.
Yeah.
This slope is we want to link to the actual data here, but we have spreadsheets that show this, how to get this number.
Yep.
And it's pretty much calculable looking at just the price history of Bitcoin, the time since Genesis.
And we have this is pretty hard coded in this thing. We're not calculating. This does not change very much. It does change a little bit, and we will eventually do this more real time. But right now, it's just hard coded.
R squared. This is the coefficient of determination. So this is what we call the fit statistically.
Mm-hmm.
It's how close the price behaves to the prediction.
And this is an amazing stat, right? So if you plug in Ethereum here, the fit goes down to 86%. Okay.
And if you plug in the S&P, it goes to 3%.
Yeah. So it's just the Ethereum is not a power law. It's just not. Okay. I'm sorry. It's not a power law. And I think that means that it's actually much less predictable.
The thing with all these other cryptocurrencies, though, is that they're all valued in Bitcoin, essentially. So
yeah.
Now we have the log of volatility. And so this is sort of how volatile how much does Bitcoin diverge
in log space?
In log space from the power law prediction price. And this is going down over time. So we should have a little chart of that. It's a good one.
Yeah.
This is the CAGR based on the model. So this is one of the first ones that someone asked about, like, how are you calculating this CAGR? Like, where is this coming from? And the short answer is this comes from the power law.
Yeah. So basically the number 5.62 determines this CAGR.
Right. So you take the year plus 1 divided by the year, which tells you how much Bitcoin is going to change over this year according to the power law. That's right. To the 5.62 power minus 1. So You turn into a percentage by taking the 1 out at the end.
And by the way, when we started talking about this, the percentage was 42. Now the average is 38.
yeah, exactly.
So it's coming down.
It's going down over time.
Then we have our projections. This is
the
cool.
future price prediction of 2025, 2030. You can calculate these numbers yourself. 2035, 2045.
So we're looking at the trend line itself is kind of getting us close, well above 1 million by 2035, and almost at 10 million by 2045. Right.
Yeah. Just the trend line.
Just the trend line.
And then we have the 1 million. So when could, based on this chart, which you can go and explore that we looked at, what's the earliest, or when's the trend line hit 1 million, and what's the earliest 1 million? Meaning at 3x the trend line, that green band. So the earliest green band for Bitcoin to hit 1 million looks like August 2029,
which is only
just
like 4 years
away.
Yeah.
Right.
So we could potentially see it 4 years away.
So
this is
the power law would not be broken at all.
At all.
If Bitcoin hit 1 million in the next 4 years. So
No.
it could even hit sooner, but then come bouncing back down. If something is happening at 3x, like you know what we are missing on this chart is the historical price data. But what you would see is that if Bitcoin spikes up to the top line, it bounces back down.
I like actually not seeing the historical price data because it's much cleaner.
Yeah, it is so clean.
You know,
yeah.
it
could be an option though.
Yeah,
like, this
like add historical data.
Yeah.
You know,
show historical data, even the price here.
Yeah.
Anyways, we're always thinking about ways to improve these things. Then we have on here the book preview. You can sign up here to be notified when it's live.
You can buy already the Kindle preview.
You can, and we have the unconference link here. You can get more info about that. So let's go back to this dashboard page again.
Yeah.
Then people always ask things like, well, what about Bitcoin valued in gold? Well, guess what? That also follows.
Now, this is a really interesting chart. Let's just stay here a second. Right now, 1 Bitcoin is about 32 ounces of gold. But the model, if you look at the model, it says it should be almost 58 ounces of gold. So actually, the gold multiplier is actually pretty low. It's almost very much at those historical lows.
So this means either gold is bubbling relative. That basically what it means. It means gold
by the way,
bubbling relative
the gold price now is pulling, right? I don't know, not sure that this one is, but is this?
Yeah, I think so. Let's check gold price. You know, I'm getting it from is this CoinGecko.
Oh, really?
Yeah, they have this gold tether gold, which pretty much is the price.
Oh, wow! Look at that. You're right. 36.43.
So that's where it's getting it from.
So it's accurate.
It's not exactly the price of gold, but it's the tether gold price on here.
Yeah, that's pretty good enough. Good enough.
So that's what I figured out.
Okay, good.
Then, so anyways, yeah. So this is looking at the value of Bitcoin in gold terms.
Right. So going out to trend, 1 Bitcoin is 4,000 ounces of gold. So you may not want to be putting your money into something unless you already have 4,000 ounces of gold. 4,000 ounces is a lot of gold. Okay. At 4,000 ounces is
kind of what this chart
200
says.
kilograms worth of gold.
What this chart says is you should sell your gold and buy Bitcoin at this price.
Yes.
That's
100%.
So like whether you should put your cash into Bitcoin or not is another question. This is just looking at gold and Bitcoin.
Yeah.
And if you look at gold and Bitcoin, Bitcoin is massively undervalued relative to gold.
Right.
Currently.
Let's look at the next.
Let's switch to light mode real quick for the next one.
Yeah, this one's good. Beautiful.
Now here's Bitcoin as it relates to the M2 money supply.
Right on track. One for one.
1 for 1, exactly modeled out. I mean, it's amazing. That is amazing. That's just circumstantial that's looking like that right now because there's a 94% chance that it will be on the trend line. Yeah. Right.
It's
a very high correlation to this, but this gives you the
BTC gold was also pretty high though. Look at the price of BTC gold, 95.
It's actually higher.
Yeah, and the S&P. This is also another one. The BTC relative to S&P is a power curve.
It's undervalued too,
and it's other value. So S&P is pulled ahead a little bit.
But so what does this mean that Bitcoin's a power law against gold, the M2 money supply, and the S&P 500, right? So I think this is like the minutia that people don't have any clue.
By the way, I don't
And
think
our book actually doesn't address this very closely.
But I don't think anybody prior to this chart has ever done this. I've never seen a power law versus the S&P ever.
Yeah.
You know, and I've never seen data like this ever.
But what this basically means is that Bitcoin's value compared to basically anything is growing at a huge rate, a massive rate comparatively.
Yeah.
And so so you won't get these same numbers on gold versus M2 or gold versus SPX or SPX versus gold.
Right.
Or XPS versus M2. Like you're not going to get these same power law numbers.
Right. Let's go to the asset classes real quick. So why don't we explain this thing, Ben?
Okay, well, this is just looking at from the year 2015 to 2025. How much has Bitcoin gone up each year? How much has the S&P gone up each year? Bonds and gold. So this doesn't include real estate as an asset class. It's too difficult to do that globally. But these are all global assets that we can look at, right? So in general, 2015, Bitcoin went up 34%. The S&P went up 1%. Bonds went up 0.5%. Gold went down 11%.
Oh, it's just changed real time.
Yeah, real time and updates. Yeah. So every year we can look at this and see that in bold, we see what won. And also on the right side, this column here, you can see what won. So the winner was Bitcoin 2015. 2016, Bitcoin. 2017, Bitcoin. Huge gains that year. Even with those gains, though, did not break the power law. Okay.
Yeah.
So now in 2018, well, massive down year for Bitcoin. Bonds actually won.
But just by
at 0%.
They were at least
they just didn't
least bad.
Right. So they didn't go down
at all.
At all. But then the next year, Bitcoin made up for it. 87% winning again. 300% winning again. 2021, 59% winning again. Double what the S&P did.
Right.
Then 2022, down year. Gold won, but basically by doing nothing.
Yeah.
Okay. In a year where everything does bad. That's good for gold. You can see gold and bonds did well in those 2 years where everything else did.
But they
bad.
just did good by doing nothing.
But if you look at this in general, if you think that we're going to generally have a profitable year for the S&P, then Bitcoin's going to beat everything.
Right.
There's no year where the S&P made money that gold didn't, or that not that gold didn't beat it, but that actually S&P beats gold plenty of times, but that Bitcoin always beats it. So if you think the S&P is going to do well, gold, Bitcoin's going to do better. Sorry, I can't talk. Anyways, 2023, 155%, 121%. Now this year, we have 24% with a 39% in gold. Now,
so gold's leading this year.
Gold. This could actually be a breaking year for this this particular trend.
I don't think so. I think Bitcoin's going to come back and kick gold.
It seems like it to me. It seems like gold prices are basically, kind of bubbling right now relative to Bitcoin. And so,
by the way, if you like this chart, please give it a review on the App Store.
Yeah, if you like this, please go. Please go download the app. You can go here. You can get the app. On Apple, and we're working on the Android one. I've got it finished up now, and there's a new version that's coming out. You'll see the new.
Oh yeah, there's a new icon. There's
a new icon that we worked on.
We're very proud of our 5 out of 5 rating.
Yeah, we got a 5 out of 5. Yeah, let's take a look at who's reviewed it so far.
Yeah. I mean, I gave it a review. Let's see. Yeah. Let's see. Great Bitcoin and ecosystem.
Rusty, Tillery.
Okay.
Yeah.
Thanks,
Power Law is
Rusty,
amazing and motivating.
Man.
Yeah.
Run Biddy.
Okay,
I love that.
Yeah.
Troop Fred,
that's you. Me. Yeah. Man. Get in, loser. We're going to 1 million. Going up forever, Laura.
These reviews mean a lot
forever,
to us.
Laura. It's hilarious.
We really like our reviews. Thanks for,
Laura. And you can also click here and you come up with this really cool shareable version.
I didn't see this. This is like another hidden gem in this thing.
So you can screenshot these and share them. I should make these images, but
yeah.
Anyways, there's also one more of those here on the main one where you can Bitcoin wins.
Yeah, that's pretty cool. Okay, so anyways, that's kind of wraps it up. That we have the app. We go back to the
stop sharing.
Yeah, no, I'm gonna go there. Okay, yeah. So that's kind of what we're up to. We got this app. We'd love for you to try out our app. It's fantastic. I really think it's just a great app.
Yeah, and gold's been front running Bitcoin price. So in general, these things, it's interesting. We're looking at sort of one thing we didn't chart out on here yet is the correlation between the market changes. So Bitcoin went from being completely uncorrelated to the S&P to going into pretty high correlation during the pandemic.
Mm-hmm.
And what it looks like is that Bitcoin is more correlated when the prices are going up than when the price is going down, right? Isn't that what we found?
Yes.
So, so market movements is something we should chart out. This would be a great chart for us to build. Is the how well the market correlates in up and down between the S&P and Bitcoin, for example. So, anyways, if you have other charts, any questions, ping us. We're on X all day long.
And then also, this book is versioned, right? So, this book is not just one book. It's final. This book
we'll be updating it.
We'll be updating it kind of in real time. As you buy a more recent version, you're going to get
book. We had to get it all right and print it and then sell it. We're doing something different this time. We're using Amazon self-publishing so that we can upload new contents with slight tweaks as we move forward.
But we think this will be the ultimate orange pilling book for you to orange pill your family, your friends, etc. Everything in the book, all the tools, all the data, all the charts, everything, it'll be in one book to orange pill people. I think that's
it's going to be ammunition for you to go to war with anyone who has any arguments about whether to put their money in Bitcoin or not.
Yeah.
So this is war, and we're building a nuclear bomb.
Yeah. So go get your nuclear bomb. It's going to be available. When do we think the actual book's going to be available?
We know. September 30th.
September 30th. So that's in 2 weeks. So roughly in 2 weeks, you'll have a physical book. It's going to be about the size.
We're putting like countless hours into this.
I mean, we are putting days and nights and everything. And honestly, it's not to make money. I would like to say we're going to make tons of money with this book.
The book's going to be $20.
It's going to be $20. The reason, look, the last book, this book here,
cost us so much money.
This book here costs over $100 a book to make. It's just insane. It's just, we showed this to somebody yesterday and they were like laughing. They were like, "What? $100?"
Yeah, someone who wrote another book. This woman who wrote this book about health. There's a very interesting book, but she
was laughing,
and
laughing
the amount of money we spent on. So did my friend's sister who makes books for a living.
Look, this is a special book, and this book,
it's like an art piece, really.
It's like an art piece. It's sort of like, how much does a Hermes bag cost? A lot. You know what I mean? Yeah. It costs a lot, and
but we ended up making our money back plus some more.
Yeah, and we sold about $500,000 worth of books. Yeah. It was great. Will I do it again? No, I will not do it again. Why? Because there's better ways to make money, buying Bitcoin, for example. But it's important for us to build this book because we really wanted to kind of create for that book, a record of what we think is going to be, one of the most important inventions of the world, really, which is Bitcoin. Pre-orders are not available for the actual book because
we decided not to do
that. We could have done it with Ingram Spark, but we decided not. We're so close now, anyway.
It's very hard to do. But you're not going to need a pre-order. You're going to be able to get on day one. And we hope everyone does go and buy it on day one. It'll help our sort of sales ranking and stuff. And we're sure we're going to sell a couple hundred on day one minimum.
Yeah.
So I think everyone's excited to get the paperback version. It's going to be a really accessible book. It's going to be a book you can give to people.
And we're trying to make it, look, I hate, we
want everyone to give it to their financial advisor.
Yeah, we gave
dad's financial advisor.
It came out, the first parts of it were a little tough to read. I'm sorry that I had to burden people like Tom Young through it because it was a little bit, the first verses, there's a lot of it, like very kind of rough math, hard stuff. I put some stuff in there on the Kelly criterion and stuff. That's the only actual math in the book. Mainly because I kind of wanted to, I should mention that one of the ways we built this book was very interesting. So I had this idea, the white paper was set in LaTeX. And LaTeX was developed as an offshoot of tech. And I forget, there was a woman who built and that's how the name LaTeX came about. LaTeX is the new tech, basically. It's what survived. Tech was created by Donald Knuth, who I knew, and Donald Knuth was on my thesis committee at Stanford. And Knuth wrote The Art of Computer Programming, volumes 1 through 4. There were supposed to be 7, but he only got through. He ended up doing 4. And they're just kind of a gold standard. A lot of people studied computer science, at least in my era, using those books. And so Knuth was at Stanford when I was there, and the Department of Computer Science was much smaller than it is, now. Computer science was almost like the math department, So there's, the math department, the stats department, the operations research department, and the computer science department, all of which were very small departments. And we all kind of, I spent a lot of time in Margaret Jack's Hall, which was the computer science building, or in Whitehall, which is the math building. And so the stats building I spend most of my time in, actually. But tech, I didn't actually use tech for my thesis because it was just so laborious to use at the time. But I sort of figured, that since Satoshi had used tech for the white paper, LaTeX, I felt it was appropriate to use LaTeX. But that means that we can have these equations, these beautiful equations, which you can't get in traditional, Word, etc. So I wanted to use LaTeX for that reason. So what we did is we compiled everything in LaTeX. How did we actually do that? What was
We started out by we use AI to create the initial LaTeX, and then we ran it through this online platform. Actually, I think we were doing conversions first. First, we were doing conversions through that LaTeX website.
Oh yeah,
where you can convert different document types to LaTeX. And we're like, this looks like the white paper. This is so cool. It's so scientific looking. It's so factual.
Yeah.
And then we eventually figured out that Claude Code could do the formatting for us and build LaTeX files. So then we started building Markdown files of our own writing. And we were working on these Markdown files as the main source of truth. And then we were converting those to LaTeX. Because Markdown, you can read pretty much and edit live. You can just write in Markdown. And so we were converting those to LaTeX. And then that's how we got initial version in LaTeX. And now we're basically just editing the LaTeX live. So it's not that hard to edit. It's kind of like almost like Markdown, or HTML. But it's coming out really, really interesting, and allows us to very easily change the format of the book. We're like, make the font size like this, or change these graphs to here. And then we have our creative director, the same guy who did all of our charts and look and visual language for the book, for the Big Bitcoin book, redoing all of our charts. And they're pretty simple charts, but they're complex ideas. And so turning them into the most readable versions, very high contrast, black and white, is an art in itself. And he's doing an amazing job at this. Like you need to work with someone who really gets that. And also he did the cover design. So that's influenced a lot of our direction and branding. So he's really good at that kind of stuff. And his name's Lee Steffen. I highly recommend using him. But anyways, he's kind of our secret weapon. I shouldn't even tell you that.
Yeah.
But so that's kind of the how we're producing this new book is very different, and we're iterating on it so rapidly, and we're able to use it. We use GitHub. We use GitHub for the storage of the book, so we can both work on it in our free time at home, and we work on it here together in the office,
or even in Waymos or
in France,
the car wash,
wherever,
everywhere. The whole thing is a very interesting collaboration where, at this point, AI is kind of more the editor and the content manager, and we
have a lot of rules too. So AI, we write a lot of rules for AI of what it can and can't do. We don't give it just free reign to do and rewrite all of our writing. We have all these rules about it, and we constantly have to, if it rewrites something of ours, we constantly have to go in and retweak it and rehumanize it, because it tends to do things like these rhetorical flourishes.
Like it's not speculation, it's math, and all these kind of things. I see them all over X right now.
Yeah, they're making me sick, honestly, now, because I've become so attuned to them. But we essentially, the way I like to think of how we use AI is we compose the musical piece, and then we conduct it, and the orchestra is the AI,
Yeah.
the performer. So we direct it a lot to make change. We talk to it.
Yeah.
We dictate to our Claude code even to help us make changes. But overall, the book is going to be. It's not a book written by AI, really. It's a book written by us. And we're reading every single word of it. We're editing the whole thing to make it flow like a story. We want it to be funny. We want it to be entertaining. And we want it to be educational. And it's going to be all those things. We're laughing so hard reading this book, honestly. And we're like, we're laughing reading these chapters. That's a good thing. We've got great stories in there. We've got great anecdotes. We've got easy to memorize things. And also some harder things to understand that are very mathematical, that we're working on simplifying, but look, we might not be perfect on it. It'd be awesome to get people to read it early too. Like Tom Young has a copy, I think, too.
Yeah.
But we've already changed it so much, Tom. So anyways, we're super excited about the book, and we're excited about Bitcoin. And man, what a great year to be alive.
All right, guys, we're going to end on that. We'll talk to you guys.